Hello folks. So today we'll discuss about fundamental analysis. Fundamental analysis involves balance sheet analysis. The first question you have to ask is whether the company declares higher dividend each year and higher retained earnings. And then how does it affect the price? Because the sign of a good company, a healthy company, is one where regularly the total earnings increase and they can be reflected in higher retained earnings as well as higher dividends. Second question you have to ask is whether the contingent liabilities are high and will they positively or negatively affect the price. Because contingent liabilities are outside the balance sheet and the balance sheet is covered to the extent that the contingent liabilities are not exposed in it. So you have to look for the contingent liabilities and then see whether this is going to affect the price negatively. The third question you have to ask is what is the level of book debts and the rate of their recovery? Will it aid the price increase or a fall? Because the level of book debts is the one thing that shows whether the running of the company is within required level. The rate of recovery of book debts is the health sign for any company. If it is healthy, then the price will be aided. Next is what is the gross working capital and net working capital, whether it is beneficial for a price hike or not. Gross working capital involves the total working capital assets and net working capital is that amount to the working capital that is contributed by the long-term sources other than the sundry creditors. So if you have a gross working capital which is useful and a net working capital which aids, then the price will be increasing. What is the inventory turnover ratio? Whether it aids or reduces the market price. Inventory turnover ratio is one sign of the working of the company. If the company is a healthy company, then inventory turnover ratio should be equal to the number of times the production cycle goes on in a year. So find out the production cycle and then compare it with the inventory turnover ratio. Now what is the additional revenue generated over the total assets turnover ratio? Will it aid the rise in prices? So you have to discuss about the additional revenue generated. It's not just the normal business, but many times every company has other sources of additional revenue generation using the total assets. Wherever they are not used for the company purpose, they can use it for some other purpose and raise additional revenue. What is ROCE, return on capital employed? Will it aid or reduce the market price? That's the next question. ROCE is a major sign, a major method for analyzing a company. What is the debt equity ratio? Will it increase the leverage and hasten revenue generation or will it increase the price? Debt equity, actually debt is the way you can earn more for your equity shareholders as long as you are able to service the debt. So that is the position. What is the interest coverage ratio and debt service coverage ratio? Whether the company is able to bear the burden of debt and interest. You have to find out whether the interest coverage ratio is at least 2 times and debt service coverage ratio is at least 1 time of the EBITDA. If that is there, then the company is able to bear the burden of debt and interest. And what is the value of deferred revenue items and amortization items? Do they aid in the increase in the income? The value of the deferred revenue items and amortization items are the cash retained within business when actual liability has already been adjusted. So that will aid to increase the income. Compare EBT and EAT. Find out the effect of tax on returns. Many companies don't plan their taxes properly and most of their income is lost in taxes. So tax planning is a biggest method of getting more revenue for the shareholders. Next, what is NPAT trend? Does it aid a rise in price? Net profit after tax trend is more important than the net profit after tax itself. A trend is always beneficial. What is EBITDA trend? Does it aid a rise in price? EBITDA trend also is helpful in increasing the price. What is the turnover of business trend? Does it aid the price increase? Then business turnover is the most important thing. What is the position of bad debts and their trend? Does it indicate better debtor management? Bad debt should go down. Bad debt provision and bad debt written off both have to be seen. And if it is going down, then it is a better debtor management. What is the closing stock trend? And non-moving items and absolute items in the inventory, does it aid profits? Closing stock trend is more important because closing stock many times covers non-moving items and obsolete items. What is the EPS, NPS and PE ratio? Does it make the scrip costly or cheaply to acquire? EPS is earning per share, NPS is net profit per share, and PE ratio is price by earning ratio. These three things will indicate how costly is the share. What is the difference between PE, that is price per earning, and P by BV, that is price per book value? If it is low, then the stock is worth buying now, and it will be very low cost acquisition, and you will get very high returns later. So this is one of the methods whereby you select a share. What is P by BV? That is price per book value. Is it below 1? Examine its sales growth. If the sales growth is above 50% and price per book value is below 1, then you will definitely buy it. It will give you a greater return. Thank you for watching this.